Hey everyone, before we get into this, remember this is never financial advice. I'm not a financial advisor. This is simply a video blog on how one trader sees the market, and everyone needs to take responsibility for their own decisions. All right, the Protrader crew have asked me to do a quick video on trailing stops and how I get out of stocks. And I think before I get started, this is just how I do it. There are so many ways to trail stops, and this doesn't mean that this is right for you. This is just what is right for me, and everyone needs to figure out their own way to trail stop losses. The second important point is that it really depends on the strategy you are trading. I am only talking about momentum trading from in growth stocks, and that is it during a bull market. I'm not talking about long-term investing, trailing stops, and I'm not talking about specs. Okay, when I'm trading spec stocks, I tend to be scalping them and using profit targets a lot more often. But with the big names, the good names, the growth stocks with real businesses, with growing earnings and growing revenue, the stocks that I want to stick with for huge moves, then I definitely try and let the market take me out more often than not than taking myself out, because these stocks during bull markets will go a lot higher than anyone will think they will go. And so the other third important point is that every single example I'm using here to explain what I do I had talked about on Breakout Wednesday videos prior to them breaking out. Okay, I've traded these. This is not some hindsight bullshit where I'm just looking back on things and saying, hey, this is good. I've talked about these before they broke out. I do it every week on Breakout Wednesday, every Wednesday, and it's a free service. Okay. Now, let me just get into this. So the best way to explain it, my fourth point actually is go and 20 years ago I started trading, okay? And one of the guys I studied the most, Frank Watkins, got me started, and then after that I studied everything about Dan Zanger. Okay, he is a momentum trader who turned $10,000 into about 20 million. And there's a lot of info out there. Okay, he trades exactly the same way. He trades chart bases, breaking out in high growth, high earnings, high revenue stocks, which are in new industries, exciting new industries, and they are growing quickly. And he uses kind of, he sells into strength like me, and he also uses moving averages to take him out. Just simple moving averages, okay? Another good podcast to listen to, that's just one podcast from Dan Zanger. There's a few out there, and he's also got a website. He charges for service, but he also has just a lot of free content to learn from. Another thing is this podcast the other day that came out on Chat with Traders. Now, this guy, it's amazing. Like, listening to this podcast, it's so identical to the way that I trade. And he learned everything from Dan Zanger too, this guy that he says about in his podcast. And he uses simple moving average as well. So there are a lot of experienced traders that simply keep it so simple and just use a plain old moving average to get themselves out of the market. The benefit of using a moving average is that it's so simple. When I use ATRs and when I use moving average crossovers, or when I use some other method, I just never stick to my rules. I just can't do it. I don't know why. I'm not strong enough mentally, whatever you want to call it. But when I use a simple moving average, it's just so damn easy to do. All you have to do is sit back and do it. Okay. Now, 5 examples from charts that I traded, okay, and I talked about on Breakout Wednesdays. Tesla formed this huge base here, broke out on this day here, the 17th of November 2019, okay. Now, what my strategy for all these is I always take some off, I sell into strength, okay, and I take some off pretty quick, like literally after a week or a couple days even, I will be selling some, okay. I will always kind of figure out my first profit target somehow, usually based on the depth of this pattern. So if we just take the depth of that pattern just really crudely and whack it to the breakout point, that would be classically taking the first off up here. Now, I took it off way earlier than that because I'm pretty impatient, and so I took a smaller profit target here, and I took off a bit there, unfortunately. And then the rest I sat with using moving averages, okay. Now, for this particular one, I used a 20-day, which is this red line, and for most of it, and I used the 50-day for some of it, okay. I tend to stage my exits. When I'm getting long, I just go long the whole lot, okay, my whole position aggressively, and then when I'm getting out, I will stage it. All right. And so This is a perfect example. Obviously, I'm going to show you some examples that did not work out well, but the 20-day line is the red one here. This is the 10, this is the 20, this is the 50, this is the 150, and this is the 200, okay? Read Mark Minervini's books if you want to learn more about moving averages and how powerful they are, but if you use them consistently. Now, from here, the 20-day line gets you out here, okay? Stops down below the 20-day line, and you sell on open the next day, which is here. Now, this trade takes little thinking. You just literally sit in it. It's a video game. All you have to do is follow the rules. It's as simple as that. It's when you don't follow the rules and you quickly sell too early. It's when you just take small profits instead of big profits. Okay, I still make those mistakes all the time, but when you just have a simple plan like this, it's much easier to just stick to the plan. Okay, so that took me out up here, and that's a pretty damn good trade, right? Anyone would be happy with that. And then breaking down the 50-day line here, obviously takes you out. You got whipped a bit on the last bit, all right? But the other point I use to get out of stocks is clear price point, like support breaks, okay? So that's why I've got this red line here, because this is a clear swing low. Like if this comes down and breaks that is a significant low that it's taking out, and then I will always trail my stop there as well, okay? So sometimes I won't wait for the 50-day line. I will literally, if there's a bit of support that makes sense, I will bail the rest of the position there as well, okay? So that's what I did, obviously, on Tesla. Now, let's just go on to an example on the ASX. Afterpay, everyone knows Afterpay. Now, I talked about this huge, lovely base here. Let's just get rid of that line, because this was the base I was talking about on Breakout Wednesday, and it broke out and absolutely went crazy for a while, okay? Now, once again, I always take a bit out after this first initial breakout, okay? I think it was on this second day here, I took a bit off, which is always a bit too early when you get in these huge moves, but as I'll show you in a sec, sometimes they crash and burn on you, and so it just really is an insurance policy for me, okay? And then once again, this was a bit more frustrating. I staged this. I used some 10-day, 20-day, and 50-day moving averages as my trailing stop loss, okay? The 10-day moving average is this purple one here, got out a bit there. The 20-day line got out a bit there. The trade didn't look like it was going too well. Then the 50-day just keeps me in a little bit of that trade, and it keeps cruising, okay? Then I always remember use some support lines. I actually missed that little pivot, and then it started crashing down there, and I had to give a fair bit back. And that's one of the problems of any stop loss method. It's the whole point of a stop loss method is to have your stop quite a long way away from price to prevent getting whipped out, okay? There's no stop loss method in the world that will prevent whips. A moving average cross doesn't, okay? A simple moving average doesn't. An ATR doesn't. It's the whole thing about the stock market. If it's going to whip down, it's going to whip down. There's nothing you can do about it other than just get over it. And so that is another example, and that's that. Now let's just move on to a current one that I'm still in. I've talked about like literally for months on Breakout Wednesday. It set up in this amazing base. It broke out, okay? This is my first target up here, which is just the depth of this pattern. And then another target up here, which is the 2 times the depth of that pattern. Okay, and then as I stated on Breakout Wednesday, I'm using the 20-day line to get out of my rest of my position, which is this red line, okay? There's literally nothing for me to do on that trade until it closes below the red line. There's no point looking at it during the day. I just look at it for like a second at nighttime, and that's it. Okay, easiest stuff in the world. It's definitely not day trading. It's just hands off. Now, another one I've talked about for months, literally, is PLL. Okay, broke out of this amazing base here, gapped up, based out, came back, touched a breakout and went nuts, okay? Now, you can see here what I was doing. The profit target here is just the depth of this pattern. Took half off there, I think about half, and then another profit target, which was 2 times the depth of that pattern, took some more off, and then I'm trailing this with the green line, which is the 50-day moving average line, okay? It's important to note that before I enter the trade, I tend to choose what moving average I'm going to use, the 10, 20, 50, or stage in it. And when I've got a big base, I tend to always, stage my exits where I'll take a bit. But this guy, because I have already had 2 profit targets here, I'm using the 50 days. I've stated on Breakout Wednesday so many times that as my exit. And this is going to whip around. I'm going to have to give a bit back. It went up to $1.13, and that moving average is all down at 78 cents. Now, some people will think that's crazy, but I'm going to show an example in a sec with Riot on why that isn't crazy, okay, and why it can really pay off. The only way to make truly huge returns in the stock market is by letting the market take you out, and just sit in with winners for as long as possible. Now, One more example of a choppy stock lately. This is Shopify on the New York Stock Exchange. Now I talked about this on Breakout Wednesday, was just forming this amazing pattern just here. Broke out here, all right, took a little bit off after day 2, way too early again as always, and then this thing chopped about, okay, and this is obviously it went up a bit more than chopped, okay, but I got out a little bit here, came back down, and if we look here, I was using the 20 and the 50-day lines, closes below the 20 here, got out about break even, chops up again, closes below the 50-day line here, and I get out of the rest of it, okay? So both these exits are about break even, and then a small loss on that one, and that's just trading. I mean, a golf player doesn't expect to hit an eagle on every hole, right? They have some blowouts where they ruin their round, and so trading's the same. You have small losses, you have break evens, you have big winners, but the key is just never to have a huge loser. I mean, because that really stuffs your account up. It's all about just trying to have huge winners. Okay. Now, last one. All right, and I stuffed this trade up a bit. All right, but this is just Riot, which is a blockchain stock. A crypto stock, not a blockchain stock. Same thing really, but buys bitcoins and stuff. Huge company obviously these days. Now this was a base I talked about back here on Breakout Wednesday on the 17th of November. It broke out a huge move. Okay, now obviously this whips in and out and would have taken you out if you use the 20-day line and the 10-day line up here. Down here for the 10 and here for the 20. The 50-day line kept you in, and if you're waiting for a close below that 50-day line, you'd actually still be in that stock. Okay, now that the whole point of letting the market take you out rather than just bail everything at a profit target for these big momentum stocks is that you just never know how high things are going to go. This thing broke out at like $4 something, and it's currently at 48, and it went as high as 77. All right, so you letting the market decide when you want to get you out, when you should get out, and let it take you out is it's so hard to do. You need so much patience, but it's the only way to really sit with winners and grow the bankroll. Or this strategy works during a bull market. Okay, I don't do this during a bear market. I don't do it in a sideways market. Well, I do a little bit, but I wait for raging bull markets to set up. And then I use this strategy. I use different exits when it's a bear market, and I use different exits in a kind of choppy sideways market. But I've been pretty clear this is for a bull market. I hope that helps someone out there. Take care. Stay safe. Cheers.